Well, hello everyone. This is Roger Scott, senior trader from Wealth Press. Today is May 1st, and as I always say, let's get into it right now. And by the way, happy Friday. Where has the week gone? Well, we've had earnings. We've had about 200 S&P companies report. So far, earnings are not as bad as expected, and that's a huge surprise. Let's get into the news, and then I'll get into the nukes and crannies. And last night, we had Apple and we had Amazon report, and overnight they were both lower. So it looks like we may have a softer Friday ending the week. We've been fairly bullish for the last 3 or 4 sessions, but it looks like earnings are going to start taking their toll. Let's get into the news, and then I'll get into the market. Shares dropped in Europe and Asia on Friday after the latest data drove home the extent of the economic carnage from the coronavirus pandemic. Yeah, we still got a lot to go, folks. It's not over just yet. Signs of growing tensions with China, Australia's biggest trading partners, added jitters. The two governments are at odds over a call for an independent inquiry into the origins of the coronavirus, with China warning of possible repercussions for imports from the resource-rich country. Japan's Nikkei slipped 2.8% as the economy minister, who is heading the government's coronavirus efforts, said social distancing measures need to be kept in place. This is not a time to be walking around within 3 inches of each other. We need to do this to prevent resurgence of the infections. Let's talk about the S&P 500. Overnight, the S&P fell 0.9% on a dismal jobless claim and news that the economy of countries using the euro contracted 3.8% in the last quarter, the biggest slump since the euro began reporting such data in 1995. U.S. jobless claim figures brought total of people filing for unemployment to 30 million people in just 6 weeks. Can you imagine that? 30 million people in 6 weeks. Other data shows consumer spending plunged a record 7.5%. Remember, consumer spending makes up 70% of our economy. In March, from a month before, a dire blow for the economy where such spending makes up 70% of the total. I told you so. Promises from the Federal Reserve and other central banks to do whatever it takes to get economies through the coronavirus have supported buying, betting that recovery will come soon. Professional investors like me right here say optimism may be premature. I agree with that. Budget airline Ryanair said Friday it plans to cut 3,000 jobs and close bases in Europe as part of a restructuring program that includes plans for unpaid leave and pay cuts for as much as 20%. If you guys think 3,000 jobs is enough, wait till Delta and the big airlines start cutting jobs. They've got like 9,000. I mean, it's a crazy number of jobs. Oil has recovered from below zero level. It hit on worries over collapsing demand and strained storage capacity. But it's still ways to go below the roughly $60 level where it started this year. Oh, yeah. So with today being Friday, and Friday is my day to give you the biggest surprise of the weekend. The biggest surprise is, and I honestly cannot believe it, that based on all of this negative data, based on all of this coronavirus downside, the NASDAQ 100 is trading at 220, where the all-time highs are literally at 240. We're only 10% below all-time highs. We're trading above the 200-day moving average. I'm pretty positive that we're trading above the 50-day moving average. Let's take a look as well. Ooh, that ugly color. Let's change the color a little bit here. Let's make it red. There we go. Finally, we have that crossover, although look at when it happened. With the S&P, that crossover happened right around here about a month and a half, 2 months ago. Here, let me show you. You could see when that crossover occurred. Yeah, that crossover occurred about a month ago. All right, about a month ago. So the crossover occurred here, and we're still trading below the 200-day on the SPY, but on the QQQ, we are trading above, which is amazing. Now, today we're going to open a little lower. We had some negative news. Well, they weren't as negative, but they were a little worse than expected for both Amazon and Apple. There were some negative forward-looking statements. The bottom line is the market is not as healthy as a lot of investors want to believe. The point is, I think we're in for quite a ride, and I think we're going to have some bumpiness. But honestly, the fact that the NASDAQ 100 is like 10% off of highs is just, it's mind-blowing. Also, if you look at the volatility, when we had the capitulation, the fear capitulation, when Trump was talking 240,000 deaths in the U.S. from the coronavirus, volatility went into panic mode. That was about, let's see how long ago that was. That was about a month and a half ago. So in the last 45 days, with all of this drama, with all of this news coming out, volatility has been going down. And to be honest with you, that is the biggest surprise ever. To see the NASDAQ 100 10, 12% below all-time highs, and to see volatility dropping all the way down to 30 from 83, when fundamentally nothing has been changed, that tells us two things. It's telling us the markets are recovering much faster than we expected. And it's also telling us that the fear level that we saw when we first were realizing how bad Corona was completely misplaced. And I doubt very seriously, even if we see a setback in this Corona, if we see patients getting Corona again, the same people, reinfection and so forth, I doubt we're going to see the volatility go up to 80. My guess is, in the worst case scenario, we'll see VIX go up to about 60. 50, maybe 60, but no higher than that. And the VIX calculates the volatility based on implied volatility of at-the-money options on the S&P. So it's always giving us a real-time assessment of where fear in the S&P 500 really is. And the S&P 500 is the broad market index. And as I showed you earlier, it's still bearish while the NASDAQ 100 is bullish. See, it's trading below the 200-day moving average, where the NASDAQ is trading above. Now, the reason for that is, I'll explain to you. We're going to get under the hood here a little bit. The reason for that is because if you look at these sectors make up the S&P 500. And if you look at the healthcare, technology, and consumer discretionary, that's what's in the NASDAQ 100, where the S&P has all of these. And financials, energy, industrial, utilities, real estate, materials, even consumer staples. Well, not so much consumer staples, but materials, real estate, utilities, industrial, energy, and financials, they're putting a damper on this market. So the NASDAQ 100 has the 100 of the stocks in the S&P 500 in healthcare, technology, and consumer discretionary sector, but it doesn't have these 7 sectors, or very little of those 7 sectors. It does have some. It has a little bit of financial, and it's got a little bit of consumer staples, but for the most part, the NASDAQ 100, this index right here, is made up of healthcare, technology, and consumer discretionary. And those stocks have been lifting higher because those are the most speculative stocks, and healthcare is what we need right now. Technology is what we need right now. Consumer discretionary. So consumer discretionary is tied in with technology, like Amazon and Apple. Is it consumer discretionary or is it technology? That's why consumer discretionary is getting a lift too. But the majority of the NASDAQ 100, which has the health and technology and some consumer discretionary, which, as I said, is also technology based, that's keeping the market high and volatility low. And the problem I'm seeing here is only about half of the S&P 500 reported earnings. We still have half to go, and I'm expecting a little downturn. So don't be surprised if you see the NASDAQ 100 come back to the 200-day moving average and then start moving up from there, because we still have a lot of data. We still have not seen the full fallout from this coronavirus pandemic. We haven't had any meaningful forward-looking statements from companies yet. We haven't seen a lot of the companies report just yet. We don't know whether we're going to have reinfections. We don't have systematic testing. We don't have a vaccine. So I think the markets are bounced. I think what we're seeing, I think this reaction that we're seeing is a reaction from this very strong downfall where the NASDAQ 100 went from 240 all the way to 160. It's like losing about 40%, 50% of its value, which is quite significant. And that's why we've seen this big jump back up. But I think once markets get calibrated and get used to understanding that, hey, this is not going away anytime soon. There's a lot of factors. I just did an analysis on the airlines industry. We're not even expecting the worst for 2 more quarters. That's 6 more months. So there's a good chance we're going to see some bumps in this road, in this rally. Don't be surprised to see the NASDAQ 100 move to the 200-day moving average, and don't be surprised to see the VIX, the S&P volatility, move back to 60, especially if we find out that vaccine has been delayed, more people are sick or dying, there's a higher chance of reinfection, companies are slower to bounce back. All of these things are very, very possible. So don't be surprised and don't go so bullish so fast. We may be in for a bumpy ride. But I'm really, really surprised, like super, super surprised to see that with all of this news, with all of this coronavirus, with all of these deaths, that the NASDAQ 100 is just 10% or 12% off all-time highs, trading above the 200-day moving average and the 50-day line. To me, that is just a huge, huge, huge surprise and a big, big shock. So I think that's going to be a huge factor. Now, folks, I've got something really big for you. Every week I scan the market for stocks that exhibit 10 lightning factors. That's right. Only a few stocks in the entire market show these 10 characteristics. That's right. At any given time. So when I find these stocks, I pounce on them. And I just found a stock that fits the bill perfectly, and I want you to get in on it. The gains usually happen very, very fast, so we need to make a move today. I mean today. Again, big gains, explosive, very fast, and again, 10 characteristics. You don't want to miss this. Follow the link below or the button at the end of this video. Get in on this now. Lightning stocks, don't wait for anyone. Talk to you guys soon.